Super investors like Warren Buffett, Ray Dalio, and others are gobbling up stocks. And I've never really done this before, but I was asked about it. So let's give it a shot here. Let's talk about the 5 top stocks that super investors are buying to see if there's anything there. Because hey, they're super investors, so they might know something that we don't. So I'll tell you which stocks they're buying. I'll give you guys my thoughts on those stocks specifically, kind of does it make sense or not, and kind of why they may be buying those stocks as well. Just make sure you like the video if you like getting the truth without the hype. So stock number 1 is Alibaba and JD. Well, they're both Chinese stocks, so I figured we would just kind of put them together there. And I know right off the bat there, thinking super investors and thinking Chinese stocks doesn't really seem like the right play, but we have Michael Burry buying exactly that. And those are actually his 2 largest holdings in his portfolio right now. Now, I've talked about Michael Burry in the past. Obviously, you know, I think he makes some great calls. Obviously, he's made some really bad calls as well. If you track his portfolio at all, he gets in and out of positions all the time. He takes on some pretty crazy positions at certain points in time. So he's really a very eclectic investor, but he's definitely an investor that everybody knows, and a lot of folks pay attention to exactly what he's doing. Now, I own Alibaba personally. It's beaten down because of kind of the noise around China stocks in general. Obviously it is warranted there. We talked about before on this channel, if you're going to own these style stocks, the way I personally mitigate my risk with them is by position size, because they're not treated the same way American stocks were. If they were, Alibaba would be a lot more valuable than what it is today. We would be talking about Alibaba at, you know, well in excess of $300 per share if it was valued like an American company, but it is not. I understand exactly why. This is not the right video to go through and rehash all those points. But in regards to them being great businesses, I absolutely believe they are. And obviously coming up off these lows that a lot of these Chinese stocks had, it obviously was a good call to jump in on those stocks, even for just a trade, which may be exactly what he's doing. But even as a long-term buy and hold investor, I feel like being exposed to Alibaba has a very good risk reward. Now, has it paid off so far? No, it has not. This is part of investing. We all know that. Sometimes you buy a stock and it pays off. Sometimes you doesn't. But this is definitely one right here. I like the stocks. I understand the strategy that he's implementing more importantly. And I wouldn't be surprised at all if given the run up kind of from the bottom, depending upon exactly when he bought and exactly what that was, if he gets out of the trade as well and takes his profits. Because again, that kind of seems to be the way he runs his fund. So stock number 2 is Google. Now, Jeremy Grantham was the big buyer of this stock. I actually saw it in a couple other guys' lists too. I can't remember right off the top of my head what other super investors were buying Google. Now, of course, I pressed record on the video. Of course, can't remember. But nonetheless, if you don't know Jeremy Grantham, he is what I would call a perma bear. He is one of those doomsdayers. He predicts a crash every single year. He's been doing that since about 2011 or so. So if you're one of those folks that thinks, you know, during the 1 year where it's like 2022 and the stocks are down and he looks like a genius, okay, go for it. But he was literally telling you a crash was coming every year since 2011 was when I kind of started tracking his newsletter there. And every single year it's the same exact, you know, a very similar bearish case as to why the whole economy is going to collapse upon itself and the whole stock market is going to collapse. And even in 2022, he was out there saying that not only, I'm talking about after we'd already crashed down, you know, 25% or so, oh, this is just the beginning. It's going to get a lot worse. You guys just wait. And the same exact thing at the end of 2022, 2023 is going to be a terrible year. And obviously it went the exact opposite. So now that you guys kind of have that background on him and kind of what he says every single year, it's very, very interesting to see what positions he actually takes up in his portfolios. Because if you got somebody that bearish and then they're making a bet on a stock there, obviously it means that he feels they can, you know, kind of weather any sort of downturn that we have. And obviously he's going with Google there. Now, you guys know I've been gobbling up Google for, well, honestly, a long, long time now, you know, almost a decade. But nonetheless, especially when it got down in the 80s, obviously we're gobbling it up whenever it got disrespected after the, you know, Q4 earnings. You know, Wall Street decided to beat it down again while it ran up. It seems like every other name was running except for Google. We continued to buy it again. And obviously we have been rewarded as shareholders since then because we've gotten a significant increase in the stock price this year. So obviously you guys know I'm very bullish on Google long-term. And obviously even the doomsdayers are bullish on Google as well. But would I add Google to a portfolio that I was just starting off fresh for a new investor out there? Well, you can actually see the answer to exactly that for just $15 if you join our $250 portfolio challenge that we started in my group for just $15. You can watch me build out a portfolio from zero all the way up to 6 figures plus. And if you want access to all the buy and sell alerts and all of my portfolios, you know, get 5 courses for free, be able to use our stock analyzer tool for free, get your free coaching, be able to jump on our live Q&As. Guys, there's so much involved in the group there. Make sure you check out the pinned comment down there. Either jump on one of those founder spots for $15 or jump on a regular membership and take advantage of the sales before those spots fill up on the $15 side and before the sale expires for a full membership. It's the pinned comment down there. Just check it out and see if a membership's right for you. All right, so stock number 3 is Johnson & Johnson. Now, Ray Dalio has been buying up this stock like crazy there, especially since it kind of, gotten beaten down pretty good this year. Now, in regards to Ray Dalio's track record the past few years, he's kind of been a little bit of a doomsdayer too, per se. And he was obviously wrong, especially in 2023. He was significantly wrong with his predictions there. Basically, in a year where the S&P returned 24%, I know a lot of you guys returned 30%, 40%, 60%. Some of you guys returned triple digits in 2023 in your portfolios there. He actually lost money, I think a little bit over 7% or so, and he lost money in 2022, as most of us did as well, losing around 12% as well in 2022. So he hasn't had a good past couple of years, but that's okay. That's all in the past here, and he's done very, very well this year so far. So, the question kind of becomes, is there a diamond in the rough there with Johnson & Johnson? Now, for me, I understand exactly the play there. I understand there, he's betting on it's just beaten down too much. And there's kind of a turnaround at change there. They own so much. I don't think it's one of these companies not at risk for bankruptcy or any other ridiculous stuff like that. It's a good, solid company, bought on a discount there, so I don't have any issues with it specifically. And again, it's not a high growth strategy or something crazy like that. It may be more of a stability play, maybe still kind of trying to hedge against the recession a little bit, might very well have been the thinking there. But nonetheless, Johnson & Johnson is a great company. We know they've been around forever. They're going to be around probably for most of us for the rest of our lifetimes. They own a ton of things that we all use daily and have to use in a lot of cases in order just to, kind of get through the day per se. So definitely not a terrible pick there. And I definitely like the fact that he was buying it on a discount, because you guys know I like it whenever great businesses go on discount. A lot of times that is where a lot of money is made in the stock market. Number 4 is Occidental Petroleum. You guys knew we had to mention Warren Buffett on this list. He's the greatest ever. If you guys didn't know, they had their annual meeting this year. Obviously, it was very different than it was with Charlie Munger being up there. Obviously, he's no longer alive anymore. So it was a very, I won't call it different meeting, but it was definitely different in regards to, it's the first time we've really had the full management team up there the whole time. Obviously, most of the focus was on Buffett. But nonetheless, it definitely was a different feel there than it was before. Go back and listen to any prior annual shareholders meeting for, Warren Buffett and Berkshire there. And it is a wealth of information and knowledge. It is the best 3 hours you can spend, or however long it went. That is some of the best time you can spend becoming a better investor, more so than YouTube videos or anything else like that, or anything I put out. Go there and listen to those. They're absolutely great. And the one this year, although it was different, definitely gave us a glimpse into how the future management is going to look there at Berkshire. And obviously, we got a lot of insights there from Buffett, because it was a very interesting year over there at Berkshire. But nonetheless, they added to the stock heavily, and it's a little bit different than their other oil plays. I believe they added to Chevron too, if I remember correctly. I'd have to go back and verify that though. Now, I don't play commodities personally. It's not necessarily something I understand or I'm interested in, but it's something he has been interested in for a very, very long time. I follow the Warren Buffett rule. I don't invest outside of my circle of competence. If I don't understand it, I'm not going to invest in it, because I'm just already at a huge disadvantage right there. And so I'm not going to do it. So I can't really speak to, was this a great opportunity or not? Because honestly, I don't understand the industry that they're in, and I cannot accurately project out where oil will be in the future. But I know he has done very well in the past with those type companies, and there's no reason to suggest that he won't do very well in the future with those type companies as well. And he already owned a huge chunk of it anyway, so it was just increasing the position there on Occidental. So that's kind of the play there from Warren. And number 5, we have American Express. Now, obviously, that's a famous Warren Buffett holding, but there was multiple super investors that bought into American Express once again. And I don't know what else to say about this particular company. It is definitely different than the rest of the credit cards. I mean, what's the difference between MasterCard and Visa? I don't know. What's the difference between Capital One and some of the other ones? There's differences, don't get me wrong. But if I had to pick one card that just kind of stands out, kind of in its own, kind of its own little world there, it would be American Express. It absolutely is just this different thing there. Definitely applies to a lot of, or definitely appeals to a lot of very, very wealthy individuals. Of course, the financials are solid. Everything about it is solid there. So it's not a terrible pick at all. I understand exactly if we think we're coming into some sort of an economic slowdown or such, again, the slowdown tends to, not necessarily be at the top upper income levels as much as it is down at the bottom income levels in terms of the impact, in terms of the slowdown, in terms of spending. I'm not saying other folks don't spend either, but it seems like American Express has been able to weather a lot of other past recessions, a lot of other past slowdowns with really no significant change in the business. Now, I'm not saying they didn't go down or they didn't have numbers go bad or anything else like that, but I don't remember a time when American Express was ever at risk per se. So it's definitely one of those picks to where it's a little bit of a risk adverse play. And I understand exactly why these super investors would want a part of American Express. Remember, if you want to see American Express is on my watch list or any of the stocks that we talked about today, complete with price targets, and you want to be a part of our $250 legacy portfolio challenge or take 5 courses for free, use our stock analyzer tool for free, get your free coaching, be a part of the best 6, 7, and 8 figure Discord, or hey, you just want to watch me build out that $250 portfolio, not a problem. We have a membership that's right for you. Make sure you check out the pinned comment and see exactly what all's offered and choose the right tier for you before the sale ends or before all the founder spots fill up. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.